Hello and happy Saturday, July 18th, and welcome to the weekend update done by myself, Student Alpha. I'm a certified research analyst for the stock market. These are my views and my charts of trades that I'm looking at and analysis that I do for you. The thing that I ask that you do your own due diligence because trading has risk and investment has risk of loss and severe loss. The idea here is to give you some education and show you what I'm looking at, and I ask that you do your own due diligence. This is for entertainment purposes only, as well as the education. If you ever need help, simply reach out to me at any one of my socials, or if you have my contact because I'm in your group, just let me know. I am here to help. So without further ado, let's talk about catalysts that moved the market this past week, the 13th through the 17th. We had geopolitical tensions kick up since the war that kicked off February 17th. This has been an ongoing issue, but we did have a ceasefire that ended this week. Trump clearly stated that the ceasefire is over and we're back to bombing the snot out of Iran if they don't comply with what we want. Whether we agree with that or not, that is affecting the stock market. We did have strikes and threats in the Strait of Hormuz, which drove oil prices up. We'll see that in the charts. Brent prices went up sharply at times and eased at others, but overall the price is up. We'll see that. It boosted energy stocks, but added risk-off pressure, especially midweek, contributing to volatility in the broader indices that I'm going to show you. We had inflation data from June, both CPI and PPI, that's Consumer Price Index and Producer Price Index. Both those printed cooler than expected prints. Those prints eased rate hike fears, supporting a rebound in stocks and lower yields on certain days. This helped offset concerns and aided in defensive rotation in place. So in other words, market makers who feared inflation would rotate out of aggressive plays like tech and into defensive plays. And then we saw a rotation back with those numbers, which created expansion or volatility in the market. We'll talk about and we'll see in the charts. Q2 bank earnings kicked off, as I stated in my last video, with major banks like JP Morgan, Goldman Sachs, and others. That highlighted the resilience in financial statements with beats on profits, and they commentated. There was commentary on the economy. This drove sector gains and broader optimism through individual misses on some of the names. Won't get into all of them, which created dispersion amongst the sector. We also had AI and semiconductor tech volatility with positive catalysts where chip stocks whipsawed sell-offs, early rebounds later, again, based on catalysts that we had almost every day. Where we had probably one of the strongest moves was SK Hynix's strong Nasdaq debut up 13%, Micron's investment pledge, and then AI related momentum lifting the Nasdaq at times, but pressure in and on weakness days. So we'll see that in the charts because the NAS is a tech heavy indice. We had Fed related developments and testimony. Fed Chair Warsh had his testimony and then the minutes dropped and his speeches highlighted political or policy divergences. I think the important takeaway there is, yes, he does recognize we're in a bad position, but I think for the long-term investment funds, they like what he's saying about changing the old ways and bringing in task force to really recorrect everything. So that could be a positive. We'll look at that in the charts. For the coming week, things we can expect is big tech and AI related earnings, stuff like Tesla, Alphabet, and Google's will be ramping up. Those reports are key players and will test AI capex into revenues and profits. A strong beat or strong forward guidance could reignite tech rallies, but misses, listen guys, misses in this sector could amplify that rotation out of high valuation names and further ignite downside in indices like the NAS. Our housing market numbers will be coming out this week, existing home sales starts, etc. And those will gauge kind of the sensitivity of the consumer and builder confidence. We do have a trade that I'm going to go over later in the report that is based on that. We do have, again, this week, more ongoing tensions and how that's going to play out. Will there be boots on the ground? Boots on the ground, in my opinion, is going to be worse for the stock market because that's an escalation. Excuse me. And then we also have additional Fed speakers talking this week, which sometimes what they say could drive the market, but more importantly, when Warsh himself speaks, important. And then, of course, Q2 was kicked off by the banks, and we'll have broader earnings momentum from industrial, healthcare, and things like Netflix to follow. So without further ado, let's get into the charts. And I want to thank you for being here. If you find this information value, I want to thank you for taking the time week over week. I put about 4 hours into this report, including the recording. If you could like, subscribe, follow, but more importantly, if you find this free information valuable, would you please share it out to somebody as we try to grow this footprint on YouTube with the information and education that I give out. So let's get into the charts. All right, looking at the Nas, guys, as you can see, way early back in May when price was here, I predicted the top between 30,000 and 31,000, which has held true. I did say that if peace broke out worldwide, we'd see a spike out, perhaps a blow off top. But now a lot of indicators are showing that we're turning. If you remember, and guys, if you're new here, welcome. But you can always go back and look at my other recorded videos week over week. I can't make this stuff up because it was recorded, right? Like you can say, well, you just changed that number. No, I didn't, guys. If you go back and look at the consistency there, I said that we were channeling and jump roping this VWAP with declining buy side momentum and not only declining buy side momentum, but declining volume. And now we're picking up momentum and volume on this side. And I said we were going to test this golden dot. So let's see how accurate I was. Let's remove the dot. Well, look at that. It hit exactly the zone that I drew out for everyone, including that VWAP, and bounced, right? This is the exact prediction I said that this would be support. We would get lift. How high a lift? We may get some optimism that runs back to that all-time VWAP and then retest this level. But it is my contention that we will at some point, whether it be, I don't necessarily say in the next week, but in this year or in the coming quarters, that we will arrive back down at this heavy support zone at 26,000 where we have not tested. So we want to protect ourselves against any buy that is related to this that protects us in this zone so that we can exit here and then re-enter on greater support lower. Commensurate with that, I have said that I am long the Qs or I am long SQQQ, which shorts the Qs in Nasdaq, and I am long at that green. I entered that long back here, guys, and I endured some drawdown, right? But this is a long-term play to protect my portfolio. You can also do this with options. I bought shares. We'll be getting information out to you on how to do this on options also in subsequent videos if you follow me. But now we've closed above this. So what I said is I'm only partially in this and I only buy in lots. So I bought my one lot, which went underwater. And now as we cross this, and more particularly as the NAS then closes below this zone. So this, I'm looking for a 2-day closed filter. So this is known as a false break of this level or a test into this one. Once we get a candle where the real body, that's the full rectangle of the candle, not the wick, closes below this level twice, that is a 2-day closed filter, that will be a signal for me to add to my position. I'm getting a lot of questions of when do I add SQQQ? That is what we're looking for, guys. If we get a negative test up here, that's a great time to get a discount on SQQQ, which would rebound back down here. But then the confirmation will come when we have a 2-day close filter below that. And that may happen this week. So you want to be on top of that. And then, of course, next week, I will talk about it in my weekend update. But intra week, if you follow me, I'll give you the alert that that's happening. Matter of fact, as we sit here, let's set an alert. And if you didn't know how to do this on TradingView, you see the plus sign. I'm going to set a level to where it breaks down to 28,100, which tells me it's breaking through this level so that I know to go look at my charts. And then when that happens, especially on the second day, we'll add the SQQQ position. But I don't believe that with increasing volume that this is a positive sign that we will continue to hold this. It is possible that we get a bit range bound between that key level and the developing all-time high anchored VWAP, and which puts pressure on price, creating a pressure cooker. Then at some point it squirts out of that, right? We don't know the direction that it squirts, but volume will lead us into telling where buyers and sellers are. If it's a high side sell spike, we will drop into the lower levels. High side buy spike, I don't see happening unless peace breaks out. So right now the probability is that we head down. So you want to protect yourself there. The S&P 500 did, look at this, gap down. We gapped down and then closed below that all-time high anchored VWAP where we were holding it. This was the predicted zone for in around the all-time high for resistance once it was created. right? And we fell out of that zone. And this is our first full day close below that. A second day close tells us we have further down. Interestingly enough, we do have increasing volume, which finished on the buy side in a doji. So there is a bit of a war on equilibrium between buyers and sellers here. But the next support level I really have is about 7,300. And you can see I have an alert set on that. And if you didn't know, you can set an alert on an actual indicator. This is the VWAP set to this candle at the end of March, because that's when this run started. And that's going to be very critical. That is the volume weighted average price that investors are paying for the S&P 500, and I believe that we're going to see that test next, right? So that's my next range that I'm looking for, and we'll probably see a bounce and do exactly what the Nas is doing, where it's going to bounce in between there, where it may decide to sell down. And long term, like I have 26,000. When the Nas is at 26,000, I predict that the S&P will be around 7,000, where we are due to test at some point. The Russell 2000 also closed below the all-time high. So as you see this occurring, we know the indices are rolling over, and this rolled over with higher volume. This is a multi-day close below that. As a matter of fact, it closed all week below the predicted range. If you go back and I talk about how often I'm right, let's talk about where I was mildly wrong. I predicted kind of this zone around 3,000, which the zone started at 3,000 and lower. You could say it was higher than that by 50 points, which would be correct, but I said it started at 3,000, and we didn't break above 3050. So it's still within that zone, and I believe we're going to sell down to where you ask. The all-time high anchored V, or I'm sorry, the trend anchored VWAP is this green line that I'm marking out. That's my next price target in the small caps, around 2850. And then below that, when the S&P 500 is at 7,000, the Nasdaq's at 26,000, logically, we'll see a test of market structure in around 2,700 for the Russell 2000. Bitcoin, just to price monitor it, not an endorsement to buy it. This is what I see as a dead cat bounce. Cycle low is probably going to be 48 to 50,000 as this level drops. There are some intraday or very short swings you can take in around this 58 to 60,000, because it is an attractive discount level for a lot of people, and you can realize some short gains here, but make sure you have a protective stop, as I've illustrated here, in case the time you enter it falls through. So you'll realize this small loss and be prepared to buy a lot, because the crypto experts that I know are calling strong buys, 48,000 to 50,000 around October. So we want to participate in that. Commiserate with Bitcoin dropping. Ethereum is correlated with that, although has held up a little stronger than Bitcoin has. I do not see this movement upward as a buy. The volume is flatlining. I am a long-term investor in Ethereum. I've bought it for a long time, even from $212. I'm looking to size in somewhere between 1,400 and where my last allotments were from months ago, into as low as 1,000. We could see 800 to 1,000 at cycle low, where I'll gobble up a bunch, but I'll start nibbling some lot sizes in around 1,400. And you see I have alerts here. And of course, when that happens, I will alert you, my followers, that I'll be buying Ethereum. I like its use case. Many other cryptos use its chain. So it's a very, very good crypto for that reason. Let's get into oil, guys. The levels that I talk about, this is the initial gap that I said would be support. And look how hard it fell during ceasefire. And where did it find support? You can go back and look at my other videos. I drew this support in long ago when price was up here. This wasn't just thrown in, right? And that's where price found support. And I said you could trade plan at the beginning of the week by buying in around 70 and take profit at the all-time high anchor VWAP at 84, which will be resistance. But if hostilities increase and boots are on the ground, it will blow through this. So you could potentially, if you are long now, trail up there. If you're not long now and you're looking for a trade, you could wait for it to close above 84, hold, and then buy as we get into this gray box, that zone that we stayed in when hostilities were very high. So you have another buying opportunity if 84 closes and holds on the 2-day close filter for a swing trade. But I expect initial resistance there, and it's all going to be about tweets and information that is dropped. So you have to be agile. Congratulations, because my team bought oil and we've done very well. I would recommend that if you bought here at an absolute minimum, you're at break even, but a good place to have a stop loss. If you bought in between 70 and 72 is, I had some traders buy as low as 67 in this box. That was beautiful. I would be at about 75 to 76 on your stop loss, because you want to get below this market structure in case we gap open over the weekend. We still have a day and a half of information, and bombing this is Saturday. I do know that following this war, a lot of nastiness happens on Saturday. So we could, coming into um, nightfall in Iran, have more negative catalysts that could push price up. If it breaks this all-time high, anchor VWAP, and you bought it down here, what you want to do is get your stop loss at 84. I'd be a buffer like at 82, so you don't catch a wick on the way down and try to ride that back up. And we could see 100. I mean, I've said this all along, if the word nuclear happens in any capacity, limited nuclear strikes or any at all, we will see this spike way up here, right? It will blow through this upper channel. It'll certainly hit it, but I believe it'll blow through it because, guys, I pray that doesn't happen. But as an investor, that would shoot oil through the roof. So keep an eye on that. Google gapped down. I'm not interested in buying Google until down around 300 to 315. Kind of this gap here, just in the low 300s. Again, commensurate with, I believe that the indices are going to drop, and then the stocks within the indices should drop too. So just hold for this one, wait, and let's get a better price. Stay tuned for the next update. Will be the same story for Microsoft. You can see we're in the death cross in Microsoft. Um, We are not in Google, but Microsoft is in a bearish period, so we must demand a discount. If price breaches at all-time high, we will have the golden cross, which is the 50 crossing the 200, which is an institutional buy. But I'm demanding a discount kind of in that same range as Google, 300 to 320. And we do have some defense against that drop with support in around 345 to 360. But if we believe the indices are going to drop, we also have to believe that Microsoft will as well. That's not always the same correlation. You can have an entire indice drop while there's a few stocks within it that rise, but I'm not buying Microsoft at these prices. BBAI, guys, don't sleep on this one. This is doing what I've talked about for a long time, for a very long time. And I'm a multi-time investor and profiteer on BBI, and I'm ready to buy again. Look, their latest catalyst is that BBAI launches expanded generative AI platform and capabilities for the Department of War missions, right? If you remember, the CEO of BBAI is a former Trump administration exec and friend of Donald Trump. And don't think for a minute that they're not going to get contracts. You can see I built a market structure entry off of this dip at 224. I have an alert leading into that. I will be investing again in around this area. All right, and probably a dollar stop loss. We may see that this week. So the buys, I'm going to say, are going to exist between anywhere from $2 to $2.50, and then stop loss commensurate to what your risk is. But I think a dollar is a good answer here, just in general. Is maybe as low as $1.16, but judge your own risk because there's a lot of reward in this trade, but drawdown may be real as it turns. We are in a bearish period here, and if we touch the all-time high anchor VWAP, we will correct that and go back into buying. So if we buy it around $2 and can endure a little drawdown, I think it sees $10 in a relatively short case. And when I say short, I'm talking about a year because this is a swing trade. So don't sleep on BBAI. Remember, you must buy good instruments or good trades when everybody else is fearful. And there's a lot of fear in this trade right here, but I think this particular trade is good, but please do your own due diligence. In the quantum sector, D-Wave has been a darling in the past, has given us multiple entries that we've successfully traded, even way back here. If you've followed me long enough, we made money here, we made money here. Now I think we're going to have another opportunity. This green zone and this gap that I have in here, again, $13 to $14, maybe as high as 15 are going to be the buys that closed at 16.73. Don't sleep on that support level, but also please protect yourself with a stop loss just below that 12.84 level, this swing low, because your buy zone is that green box. You can limit your downside in case it falls through there and it hunts for deeper support. But D wave is coming into that discount zone, and we'll be on top of it, guys. Follow for more. IonQ has done nothing but pay us multiple times. You can see successful trade plans that we put out, and we just have, look, do you think this is an accident when I put these lines in here? This isn't me scribbling in sand or using crayons on a piece of paper or chalk on a chalkboard. This is pure math, and anchored VWAPs are highly important. Look where it tapped. I don't know if you can see well in the chart. Tapped exactly that. IPO anchored VWAP. So a lot of selling. It has cooled off a little bit, but selling that runs sideways tells me that it could be a little more selling in there, but this is the zone to buy. And then we would target the all-time high anchored VWAP. Market structure tells us about 2586 would be the next level down to test. So if we can stay in this trade through that, we might be able to realize some benefits. However, you could buy with a tight stop loss, realize a small loss, buy again here, and that may be the turn. Guys, in all these trades, when you're buying discounts, you got to be willing to take small losses to be correct. You might take three small losses and then the fourth time be absolutely correct, make a ton of money, and then you net out your negatives against your positive trade and you're good to go. That's how all trading works. You're not going to hit home runs either time, but this is coming into discounts we can't ignore. QUBT, quantum computing. Uh, is still declining. I do have a predicted area where it's going to hit its institutional buy when this purple line crosses the 200, which is known as the golden cross. It is declining and into this level where I'm interested in it between, we'll call it 4.5 and 6. You can see I've based on market structure. As it gets into this zone, it will be an attractive buy. And across the sector, where it be BBAI, QBTS, IonQ, QUBT, I would not put all your money into one basket. I would spread that out because one or several of these in the sector will be big winners while others stall and not win, right? So you don't want to bet on one horse here. Now you will notice that I've removed some from the report and I have set alerts. So to keep the report concise, when something isn't at or near a zone, I've pulled it off the report until an alert hits, which then I'll bring it back to the report, letting you know when it's time to trade. Quadruple U, energy fuels, though it's a great thesis, it is being beat up in the nuclear side in Oklo. It fell through. This box used to be green. Once we fell through this market structure, um, it is now resistance because that market structure is resistance. I've identified the next support level we want to watch here, and that is market structure down around 825 to 925. As a matter of fact, I'm going to set an alert above that. Let's set it at 10 to know that it's running into that. But we're not going to do anything with it until it regains this level or bounces off that one. But again, this is a thesis that could pay us 3x our money if we get in at the right time. So stay tuned and I'll let you know. Oklo, guys, also nuclear theme in a death cross, which means it's selling, but you buy into sells and you sell into buys. Okay. You buy into weakness and you sell into strength. It has hit my area of interest here. It hasn't shown any support just yet. We did get a closing candle that was a doji that turned green. No volume in that. So the next lower limit, this was a double gap up previously back in May of 2025. So a little over 14 months ago, might be the next test around 32 to 34. So if we don't cross back up around 45, we're going to be interested buyers down there. But this zone is actually the width of those two boxes combined, and we want to find that support because if this doesn't hold, I think we search more towards 20 to 18. But it's getting very interesting. What you want to do is you can start to size in at a support level, but the best time to add or buy conservatively is once it shows support, and it hasn't quite done that yet. And let's keep an eye on it this week. IREN did exactly what I thought it would do. If you watched my report last week, I said that we're probably going to come down and test this group of critical anchored VWAPs, and look where it tested exactly right into this green box and to the number on that anchored VWAP. This compressed doji is good. We want to see compression where buyers and sellers equal each other out, but you can see sellers are perhaps winning. So this zone might be penetrated before it's turned. So it's getting at or near a critical buy. Below that, we're going to look at probably 22 if this area doesn't hold, but starting to look like it might be attractive if we start getting some buying come back into that. So keep an eye on IREN at current pricing with a tight stop loss. Let's get into gold, folks, because gold is a hot topic. A lot of people trade it. I love to trade it. I day trade it. I swing trade it, and I buy real physical assets and metals. So right now, it's been the story for, better part of a month. 4,000 has. And we bought 4,000 and I called the trade clear to 4,400, which was phenomenal. I called the buy at 4,000 to 4,100. I called 4,100 to 4,200 on intraday trades I'm sorry, intra-week trades for my group successfully. But one thing we want to notice is that if this breaks, we're going to see 3,300 to 3,500 where this strong consolidation is. I'm not saying it's going to break. I mean, we're hanging by a thread. I will admit that. But this little buy side spike here with volume was a good look. Now we do have a death cross, right? So this is not good look for gold. The fact that the 50 has crossed the 28, we have now entered a bearish period in gold. But supporting this level is decreased news coming out in CPI and PPI that the inflation risks are less, right? So we have some diverging catalysts. So how would you trade this? I think with the close, again, with the concern that we have more downside, and I believe we test this level at some point, we may be able to buy at the price it's at 4,000 to 4,025, and you could have a very tight stop loss at like you could have it just on the other side at like 39.75, or if you want to go a little bit wider, like 39.50, and try to realize 100 to 200 points of profit out of that. And then if we get another negative catalyst that pushes it down, we've only realized 25 to 50 points of loss where we'll start really sizing in large down here. And guys, it won't be a straight line. There'll be some support at 3,700, 3,800, 3,600 where you'll see some bounces. But down here, I'm predicting the future that this will be one of the strongest buys we can make in gold. But prior to that, we're going to have the opportunity to take short-term profit on smaller trades that we can then roll those profits into a very large trade down here. So don't sleep on gold. Commiserate with that. If this holds, ego is kind of barely hanging on to its buy zone, lower buy zone at 23 to 24 if price falls. But buying miners, commiserate with how gold moves, is a smart move because miners will benefit from gold prices. But please do honor your stop losses and try to buy a better price, or honor your stop loss, get a better price higher that has a higher uh, confluence of moving upwards. So if you want to sit and wait and see how gold reacts prior to getting into a miner, that may be smart. As we look at HYMC, the same thing. It's sitting right in the gap and buy zone with that. If you think 4,000 holds, HYMC is a buy at its current pricing, and then have a tight stop loss just outside of this gap in case 4,000 collapses, which will also drop both HYMC and Ego. We're right where we need to be, so make sure you have a protective stop loss in case it goes against us. Silver, you can see I have on the chart marked two critical areas, the all-time high anchored VWAP, which is currently at 75, and the buy zone that I've talked about for over a month at 54 to 56, where we were able to buy in and realize some profits. This is still the buy zone, but it's the same story with in silver that we have in gold. This, you can see market structure is very important. We may get a wick down as low as 45 to 50 where you'd want to participate if this zone doesn't hold, but the deceleration in silver is starting to happen and we might get it turned around. Silver is a great thesis, even though it's one of the most manipulated instruments out there, thanks to the CME. You can go Google that. It's a well-known fact. I buy physical silver all the time, and I'll be buying more in these prices. But we're looking for a bounce here. We did have some volume come in again on inflation fears being eased, and that 54 to 56 still is the buy zone. You could have a tight stop loss of $1 or $2, try to run it back up to the all-time high. If it collapses, you lose $1 or $2, and then you can buy it lower. But remember, if it starts going into money, please run to break even so you have zero loss in the trade. Most trading is running to break even, taking no losses and no profit to actually hit a good trade, right? And it can be discouraging, but psychologically, you have to understand break evens are a loss because most trading is defending your portfolio, not just making money. Platinum is sitting right in my buy zone, guys, that I identified before, kind of that 1500 pricing range, as high as 1600. Um, you can buy anywhere in there. You can see that if we run back up, the all-time high would be at 1970. That would be a fantastic trade if platinum moves up, and then you can be protective because if that doesn't hold, we're going to see 1300. So that's why where when it's hitting this zone, it's very clear where you can put a stop loss. You put it on the lower edge of that if you are a platinum investor, because if gold and silver moves up, even though platinum is a separate instrument and different use case, it does benefit from the other metals moving up. So we're at or in pricing to buy platinum at its discount range here with a tight stop loss that is commensurate with your risk. Guys, I do risk management webinars. You can reach out. I can send you the links to those to where you can purchase those for a small price that you'll pay for many times over by just knowing how to risk manage your trade. So let's keep an eye on platinum. Copper is showing strength, is doing well. Remember, AI relies heavily on copper, especially the infrastructure for these data centers. The all-time high anchored VWAP currently is at 626. The buy zone is at 595 to 605 that I've talked about for weeks, and it still is. If you bought in that buy zone and you realized your profit at the all-time high anchor VWAP and you want to make more money, I still like that buy zone. 595 to 605, stop loss commensurate to your risk. And then when copper takes off, guys, most analysts have this at above $10. So it's a matter of staying in the trade, managing your risk, and then realizing the beautiful gains that should come in copper. Like I said at the beginning of the report, where I talked about housing numbers coming out this week, this is a housing play in Lynn in terms of building and construction. The thing that I put out on this as a dividend player is just lacing around my entry, and we're fine with that. We don't mind if it runs sideways, even if you're drawn down mildly here. If you bought anywhere between 84 and 86, you might be at break even or down a little bit, but you're realizing the dividend the longer you hold it. And then I do believe that once the housing sector explodes again, we'll realize a 50% gain. And you can have a stop loss. If you don't want it really wide, you can go below this wick at 80. So 75 to 80, commensurate to your risk. But this is a dividend play. Dividends make you money when the index runs sideways. They make you money when it runs up, because then you also have appreciative gains in the price of the stock. So that's LEN, L-E-N. KHC that I added to the report just a couple weeks ago has been done nothing but pay the people who bought it. This is when I did deep research on the Kraft Heinz company. Go back and watch my videos from several weeks ago. We do have a pending golden cross, which will push this price way up to the all-time high anchor VWAP, if not higher to the IPO anchor VWAP, where my price targets will be. And as we realize these gains, we'll also realize the 40-cent dividend the longer we hold that. This is a dividend company on an American company, Kraft Heinz, that is not going anywhere. So if you're in the money and you want to go break even, do that now. I have a lot of traders who bought this at 23 to 25. It closed at 25.88 and went as high as 27. You may want to not chase the stop loss as closely if you want to hold this longer term, realize the dividends, and then hit these upper marks that I have on the chart, which are critical anchored VWAP. So KHC is doing well. If it retaps this level, 23 to 25, I still think you have an opportunity to get in, and you could tighten your stop loss to as low as 21.88 or even a little lower at $20. This, I have the low at its all-time low, right? If it comes down there and taps and you want to add in, I don't believe this breaks down here, guys. That is the all-time low in Kraft Heinz, and I think it occurred during COVID. Wrap I added last week for everybody. This is one I did deep research on. Wrap Technologies and is a technology company where they make the Bolo wrap for law enforcement. They also identified a missing link in drone technology where they've entered that. You can on TradingView, you can click this and it talks about how what they're getting into, which was a very positive catalyst. And as I identified last week, watch last week's video. This is the highest buy side spike that they've ever had, which pushed it up very much. And I said that if we run a Fibonacci, we can look for a discount on this run, right? If you run it from the bottom up or even the catalyst up, The buy zone is right around the golden ratio to half the move. Right around $2 is what I called. You can buy that. This is not a dividend player, but this has the potential to get back the all-time high anchored VWAP and the IPO anchored VWAP for 100% trade or better. I think it's all-time high, guys, was 10, let me look, $10. I'm sorry, it was 14. So this is a technology company that has a lot of contracts going in with other countries that it will be playing out good long-term investment at a cheap price. So do your own due diligence. This is a dollar stop loss for me, but remember, if you buy at $2 and get stopped at a dollar, no matter how many shares you buy, that's a 50% loss. That may be too much for you, right? But if you're only putting in a little bit and biting it as it goes, it may not. But mind your risk here. I do like the movement in this stock. And what I'm seeing right now, this is a bit of a half mast now that we have more data. So here's the pull, here's the pennant. This is a rough measurement. If that half mast plays out, that puts us at or near the all-time high anchored VWAP. So take that information for what it's worth. I like the trade. That's why I've added it to the report. And to close out, I have one more for you guys. One of the experts that's a good friend of mine, macro expert, brought this to my attention, and will stay tuned and follow me on all my platforms because we're going to be doing an interview style about DRAM, the memory chip. So this is an ETF based around chips, and I'll go over what's in there. But this is the movement. It actually was developed in April. It exploded from IPO price at 29, almost tripled, going to $80, and then it's given back this Fibonacci, the golden ratio. You see, actually, this is inaccurate now. We want to set a new all-time high anchored VWAP, which is off that, which will be red as a VWAP. You can see how I do that. Just click and add, and then the IPO. And we only have the 50-day moving average because this hasn't been around long enough to calculate a 200-day moving average, right? Because it is newer. Now, this is if you want to participate in a lot of chips and AI, what I have here for you, let me see right here. This is what the ETF holds. You can see it has, remember I talked about it being report. SK Hynix was up 13%. That's part of why it bounced. It has Micron in it. It has, and these are options and stock in it. It's 24% or 25% US Treasury bills. You have Seagate, Western Digital, Micron, Giga Device, and others. This is as well as some currencies. This is a managed fund. By hedge fund managers that will constantly rotate this as needed. So this is an opportunity to participate in a lot of these companies as they grow. And this spike was probably mainly due to the rotation back against fears, rotation out of semis back into semis right now. So how would you trade this? Based on this, because we don't have a lot of technicals on it, you can use price and volume, which is our two leading indicators. Um, if you go long off of this candle and you buy in around, it's at $52, anywhere between 48 and 50, I think is your discount, you can actually use this pivot low at 48.50, a $4 stop loss. You can run it to the all-time high for a $11 gain, which is 1 to 3, or you could hold this longer if the semis and this ETF rebounds into all-time highs again. So somebody trying to set up a buy based on this technicals, I would use this volume and volume at price here, defending yourself at about $48 and buying or starting to size in anywhere in here in DRAM. And like I said, stay tuned. I'm going to do more in-depth videos on how to invest in this and even doing options, right? So without further ado, guys, I want to thank you for being with me. Every day, every week, I eliminate some that we're going to wait to see. I analyze all the ones that you see on chart, and I bring others to your attention with the idea to educate you on what I'm seeing and to teach you. And I hopefully you find this information value and you will like, subscribe, follow, and share it to somebody. And I bid you a good rest of your weekend. We pray for world peace. And I pray that you have a good trading week this coming week, and I'll see you at the next weekend update or in one of my groups that I support.